Welcome to Accrued Interest. Today, April 1st, 2025, I want to walk you through a quick analysis as to why I think the newly IPO'd company Newsmax is a meme stock. Before we go any further, a brief disclaimer I always like to give. Everything said on this podcast is for entertainment purposes, as I am not a registered investment advisor. So we're recording this episode on Tuesday, April 1st, but tomorrow, Wednesday, April 2nd, is Liberation Day, where everyone is going to be listening to what the United States decides to do with its slew of new tariffs it wants to roll out across the globe. But before we get to Liberation Day tomorrow, let's first talk about Newsmax. Newsmax is a smaller, conservative cable network that launched in 2014. The company has been in the news recently because it did an IPO on Friday where it raised about $75 million. By most standards, that's a relatively small IPO. However, I would argue that Newsmax has quickly become the newest meme stock. The company IPO'd at about $10 a share, but in the past 2 days, it's gone almost straight up to a close of almost $230 a share as of Tuesday afternoon. All in all, the current company's valuation is around $20 billion. But in the meantime, please be very careful investing in meme stocks. Don't gamble with money that you don't have, and please do not try to time the market because I think the stock could come crashing down at any minute. Before we get to the financial results, Newsmax on their investor relations website wants to draw your attention to how they are a growing source of conservative and arguably mainstream news for millions of Americans. The company gets the majority of its profits from the Newsmax cable channel, which can be found in a variety of cable packages, satellite providers, and some online skinny bundles, but they also have digital operations too. The company's profits come from two segments, broadcasting as well as digital. The broadcasting EBITDA was more than 100% of the company's total EBITDA. For the year-end 2024, Newsmax had an adjusted EBITDA of around $10.2 million. Of that, almost $20 million came all from broadcasting. That means that the digital segment had negative EBITDA of about $9.5 million. Something that concerns me isn't so much the mix between broadcast and digital, but the fact that the digital segment not only is operating at a loss, but the loss appears to be growing. Turning to revenue, let's take a quick look at the revenue mix for the company. As mentioned, since Newsmax is a cable channel, there's no surprise that the majority of its revenue comes from advertising. Approximately $90 million out of the $131 million in revenue the company did in 2024 came from advertising. What jumps off at me is that the biggest bump in revenue over the last year came not from advertising, but from affiliate fees. Affiliate fees refers to the money that Newsmax and other cable channels get paid on a monthly basis for all the subscribers that they have on the different services. And as you've heard me say in other videos on my podcast, I am bearish on cable because YouTube and other digital services are taking away viewership. But for now, the company is growing its affiliate-free revenue, but I don't think that growth is sustainable. The company grew its revenue about $38 million last year versus 2023. However, $24 million of that increase came from a bump in affiliate fees. I think that Newsmax probably had a number of large cable deals reset, and they got a bump in their affiliate fee revenue. I would like to see more growth in the advertising line. Last year, Newsmax only grew advertising revenue about 1% year over year. Next, I want to ask, why isn't the digital segment growing? In a perfect world, you'd want to see strong growth in the digital operations to offset the potentially flat or maybe even one day declining cable EBITDA. Digital revenue of about $40 million for Newsmax is about 5% lower than 2023. The advertising revenue grew about 4% last year, which is good, but more troubling, the digital subscription revenue fell about 15%. A big question that we're going to have to explore in the future is what will be the total costs of legal settlements for Newsmax? They've had some big bills they've had to pay when they've lost cases regarding defamation lawsuits. But just to give you a sense of the magnitude, in 2024, the company, in its other corporate matters section of the EBITDA adjustments, recorded about 77 million. I know at least 50 million of that comes from legal settlements, so we need to understand before we invest how much more settlements are at risk for this company, and is that something we need to worry about in the future? On your screen, I laid out 4 quick cable and television news/broadcasting comps for Newsmax. The best comp is going to be Fox Corporation, and you see the company trades somewhere between 9 to 10 times forward EBITDA. That multiple is noticeably higher than Paramount and Warner Brothers Discovery because the EBITDA margins, the profitability at Fox News are among the best in the entire television industry. I didn't even try to put Newsmax valuation on this chart here because it is incomparable. The company is not worth over $20 billion when they had an adjusted EBITDA of around $10 million last year. Eventually, holders of this stock are going to be very disappointed. As always, thank you for listening. Don't forget to like and subscribe to the channel. Stay tuned for more updates on Newsmax and other companies this Q1 earnings season.